You see, our friend here, Mike, has a very huge investment problem. Mike thought he was buying the future. He saw the headlines on June 12 that says, SpaceX going public. He started thinking about the rockets, the aliens, the hype, the analysts screaming that this was the opportunity of a lifetime, and of course, our brother Elon becoming a trillionaire from this opportunity. So Mike did what millions of retail investors like him do when Wall Street starts selling dreams. He bought in. Because this wasn't just a stock. This was supposed to be generational wealth, a ticket to the future. Except, while Mike was busy celebrating his genius investment decision, the stock was busy falling straight off a cliff. SpaceX is now down over 50% from its all-time high. And if you think this is the crash, you're misunderstanding the situation. Because hidden deep inside the fine print, buried where nobody bothers reading, is a structural trap specifically designed to make sure regular investors like Mike become exit liquidity for billionaires who already made their money years ago. This isn't just a stock crash. This is the SpaceX bubble bursting. And somehow, it could get much worse. The manufactured peak. To understand why this collapse looks so violent, you first need to understand something very important. This price was never real. Normally, when a company goes public, the market takes time to figure out what the business is actually worth. It's called price discovery. Investors buy. Investors sell. The market slowly decides what the company should be valued at. But apparently, waiting for reality is not something brother Elon enjoys. So instead, the rules was changed for him. Literally. Normally a company has to wait around 3 months before entering the NASDAQ 100. Not SpaceX. NASDAQ suddenly rolled out a special fast entry rule. 15 trading days. That's it. Then came the second trick. The free float rules. Normally, a company needs enough shares publicly available for trading. SpaceX only released around 4%. Under normal rules, disqualified immediately. But somehow, that 4% magically became 12%. Or maybe 15%, depending on whatever math they were using behind closed doors. And this is where regular investors got screwed. Because once index funds are forced to track the index, they are legally obligated to buy billions of dollars, instant demand, artificial demand, your retirement account, your pension, your ETF holdings. You were buying peak hype, whether you liked it or not. The business in a trench coat problem. Now maybe you're thinking, fine, the valuation was inflated, but the business itself must still be strong. Well, not exactly, because SpaceX isn't really one business. It's basically several businesses duct taped together pretending to be one giant tech empire. First, you've got Starlink, the actual money printer, the one business generating real cash flow. Then you've got the rocket business, which is fine. But somehow investors are valuing it like Mars colonization is happening next Tuesday, and then hiding quietly in the corner. You've got XAI, and XAI is a disaster. It's currently burning roughly $1 billion every single month. Last year alone, it lost over $6 billion. Now here's the fun part. Right before the IPO, SpaceX absorbed XAI. So now every dollar Starlink earns gets immediately dragged into an AI furnace. Even better, talent is fleeing. The original heavyweight founders? Gone. The leadership? In chaos. Even the CEO admitted the whole thing needs to be rebuilt. So congratulations. You thought you bought the future. But what you actually bought is a burning building that occasionally launches rockets. The lockup bomb now, while the passive funds were being shoved through the door to buy, the insiders, the guys who've been holding shares for pennies since 2008, were checking their watches. See, most IPOs have a 180-day lockup where insiders can't sell. It's the closest thing the market has to waiting your turn in line. But SpaceX didn't wait in line. They wrote their own. Their lockup schedule is a ticking bomb. They released the first 20% of restricted shares just weeks after the first earnings report. And guess what? When you're sitting on a 50,000% return and the door finally opens, you don't walk out, you flee. The buyers were manufactured up front by rule changes, and the sellers were released on a hair-trigger delay. We've seen this movie before with Facebook, Uber, and Snap. The lockup expires, and the price cratered by 40 to 50%. SpaceX is just following the playbook. Why it gets worse. So why does it get worse? Because the support beams are being cut one by one. First, the S&P 500, the biggest index in the game, gave SpaceX a resounding no. They told brother Elon they won't even consider SpaceX until mid-2027 at the earliest, because the company isn't consistently profitable yet. That means there is no second wave of massive passive buying coming to save the price. Second, the lockup releases don't stop. There are more blocks of shares scheduled to hit the market at 70, 90, 120, and 135 days. Every time the price tries to breathe, Another group of insiders is going to dump their bags on the market. Third, the fair value gap. Morningstar did the math. They put the fair value of SpaceX at around $780 billion. Even after a 50% crash, the market is still pricing it at over $1 trillion. That is a massive gap between reality and the current price. The retail trap. SpaceX specifically targeted retail investors for 30% of their IPO. Usually it's 5 to 10%. The CFO basically admitted it. He said retail buyers are supportive of Elon. Translated out of corporate speak, we need people loyal enough to Uncle Elon to buy whatever we hand them so the insiders can get out. It's called adverse selection. If a retail investor can actually get an allocation for a hot IPO, it's usually because the institutions don't want it. You've won the right to hold a bag that the smart money already threw away. Conclusion. I'm tired of this bullshit. The system didn't just fail to protect Mike, it actively rewrote the rules to make sure he was the one left holding the bag while the brother Elon and his buddies cashed out. The bell already rang for the people getting out. For everyone else, the clock is still ticking. If you like this video, do well to subscribe and leave the notification bell. See you in the next one.